Hello, my name's Michael Salmony and I'd like to welcome you to another episode of Everything Fintech, where we talk to the most interesting people in the TPP and Fintech space. Today I'm super thrilled to talk to Arturo, who's had a very varied career. We have a common background in IBM, and then he actually did Fintech before Fintech even existed. Arturo, can you tell us a little bit about that?
Yes, well, I've been working since '89 at the intersection between finance, technology, and innovation. Um, since 2003, as part of Eurobits, which was, to my knowledge, the first account aggregator in Europe, which is what account information services under PSD2 were called before they were regulated. At Eurobits, I went through all the complete life cycle and ultimately sold the company to Tink in 2020 and amicably left the company in July last year.
Wow, that's super impressive. So you've been through the whole life cycle. You co-invented AIS and data access and created a company and sold it on. So that speaks for your credentials. So now just to skip forward, what you're working on now as co-chair of ETPPA is SPAA. Can you tell us what does SPAA stand for and what's it trying to do?
Yes, well, SPAA stands for SEPA Payment Account Access Multistakeholder Group. It's an EPC initiative which was originally born at the ERPB, where it was called SEPA API. Its objective is to become one prominent EPC scheme that regulates the exchange of transactions, payment-related transactions, and information between asset brokers and asset holders, which in the PSD2 world would be TPPs and ASPSPs.
So if I understand it right, it's a scheme, so a common set of rules between banks and fintechs to try and make it attractive for both sides, right? So you actually generate a fee which are paid to the banks for exposing their APIs. Is that roughly right?
Yes, exactly. So one of the shortcomings of PSD2 might be that there were no financial incentives for ASPSP to do things right. So you could force them to share some of the most valuable assets for free with their competitors. What you could not force them is to do it well. And to be happy to do it. Under SPA, we have one very important motto, which is fair distribution of value and risk amongst participants. So that is a nice way of saying that asset brokers will pay asset holders for sharing with them high quality information and transactions, of course, always with the permission of the asset owner, which would be the asset holder or customer, typically a bank, but not necessarily.
So if I as a customer agree to expose my data because I want to get a better loan or I want to compare my insurance or get some other fintech service, the bank gets rewarded for opening up its API, even though it has to by law, but we say the stick is not enough, we also want a carrot, right?
Exactly. The idea is to give an incentive to banks to do things well. So PSD2, I'm not going to say it's not working, but I think you can say it's not working as expected. So we're trying to find ways. By the way, SPA is not a replacement to PSD2; it's a complement. It has voluntary adherence, but it's a place where banks are incentivized to do things in a high quality and even to go beyond PSD2. So there is basic functionality, which is what you would have to offer through your compliance API, but there's also premium functionality, which is anything that will go beyond pure compliance. And of course, there's basic prices for the basic functionality and premium prices for the premium functionality.
Now, I get it for the premium function. So if a bank, I don't know, allows somebody, a fintech, to see the credit rating or some high value asset, it should be rewarded for that. But for the basic stuff, I mean, some would say banks already should have an interest in working in this open economy, right? Because it's also in their interest. They actually can serve better loans. They can embed themselves in other platforms. There are actually a lot of advantages to banks in being part of open finance and open banking. Why are they also being rewarded financially on top of that?
Well, you can see it from the other side. So there are thousands of credit institutions in Europe. If you're a TPP under PSD2, you need to connect to thousands of these credit institutions, each with their own sets of rules, with their own way of handling incidents. So when you adhere to a scheme, everything is homogenized. So there's an incentive for asset brokers to pay a fee to be able to access this information and transactions under a common set of rules, which in PSD2 is lacking. Of course, if you go back again to the asset holder side, there's some additional cost to offer it under SPAA because you have to adhere to the rules. So being part of the scheme has its costs. So it makes sense that there's a basic price for basic functionality that you can obtain elsewhere. And the market will tell if the value added for this basic functionality is justified by the price, because otherwise asset brokers will be able to access it elsewhere.
Yeah, that makes sense. So one has to do, I can imagine, a bit of a difficult calculation. What is a fair price that is attractive for the banks to engage in this space, but also affordable for the fintechs or the asset brokers, asset holders, as it's now called in your world, right? And you're confident one will find a fair market price which will work for both sides?
Well, not exactly a market price, because you see, all market actors are sitting at the same table. So we have the asset holders, we have the asset brokers, but we also have the merchants, we have the consumers, and of course there's risk that competition authorities will think that we are agreeing prices, which we are to an extent, but we have to be extremely careful that we do it in a way that is reasonable. So from the very beginning, this was one of our major concerns. So what we have done is we've decided that we would go via a route which we called default asset fees, meaning that it's a cost plus model, and we hired an independent consultant to do the calculation. So basically they proposed a calculation methodology, and that methodology was fed with a cost survey performed to the asset holders, and that spits out what we call anchor fees. And then those anchor fees are tested with the asset brokers to see the willingness to pay them. It's basically a sensitivity analysis using the Van Westendorp methodology, and that brings us the final proposed pricing. And I guess the only time will tell, but I guess it's attractive enough. Take into account that in the case of transaction assets, we're competing with payment cards, and there's a lot of space there to make the service more attractive to all the actors, because the payment schemes are out of the picture.
Okay. No, so that's, I mean, you sound confident that you're going to arrive at a good price, which I can imagine is not easy with all the constraints you mentioned. It has to work for multiple sides, must adhere to competition concerns, interchange, all these complications are in there. But not to delve too deep into that, I mean, it seems you're onto something, if I can just say it, right? There seem to be more and more schemes appearing in Europe, right? And Europe being the most advanced economy in the world on this topic, that shows that this is obviously a smart way of going about it. Some of the other schemes already going beyond payments, whereas the SPAA is payments only. Can you comment on that? Do you have a plan to go beyond payments, or how would you position what you're doing versus what some of the other activities are?
Well, the ERPB has a P that stands for payments, and the EPC has a P that also stands for payments. So in terms of mandate for both institutions, we're limited to payments. Of course, we understand that there's a value that that this extends beyond payments and beyond finance. Basically, the vision is that we move towards an API economy that can be seen as Lego bricks from different industry that you can plug one to another and build whatever you want with them. So we are in conversations with other industries to see how their initiatives can plug into ours. But ultimately, many things can happen, including the extension of the mandate of the EPC to move beyond payments and extend the scheme beyond payments within the EPC. But of course, first things first, we have to prove that SPAA works, and then we can take it from there.
Wonderful, Arturo. I think our time is up, but that's been super interesting talking to you. You, I think, have incredible credibility in this space from your background and what you've done. You and the banks together are creating a new scheme to actually make PSD2 work for the interests of everybody. And you're even solving this rather tricky commercial issue along the way, and you're thinking ahead what may come beyond payments. I mean, it sounds a terrific initiative. Thank you so much for sharing that with us, and look forward to seeing you again.
Thank you, Michael. Very interesting times.